Hey, good morning, everybody, and welcome to another Tuesday Mortgage Coach Call. Every Tuesday, I am interviewing someone amazing, leaders, speakers, and today we've got an amazing mortgage professional. Before we get into today's interview, everybody on this call has something in common. You are part of the Mortgage Coach community. You have the nation's best mortgage app, and it just got better. Last week at the Hispanic real estate event, we announced the Spanish version of Mortgage Coach. So, I mean, it's live. You know, if you look in your app, you can now toggle from English to Spanish. So how we're educating, how we're helping families make decisions is just getting better and better and better. So exciting announcement. Hope you guys love it. Also, last week, we had an amazing call on Tuesday. I interviewed former Navy SEAL Andrew Paul. Awesome call. He's a branch manager in Southern California. 80% of his clients is serving the military. It was just a fantastic call. I do want to do a shout out for Jocko Willink. He's doing a big event in a few weeks. I've heard from more and more Mortgage Coach members that are going to the Extreme Ownership Muster October 20th through 21st. So do want to draw attention to that. Check it out. If you missed the call last week, it's recorded and we talk about that in more detail. So today is all about a top producer interview, and it's also about a millennial top producer interview. So Paul, welcome to the call. It's great to have you here, my friend.
Good to be here, Dave.
Good. Well, I have seen a lot of you. You and I created a training call for the Prime Lending team. I saw you at the Building Champion event. By the way, at the Building Champion experience a few weeks ago, we did a Mortgage Coach Mastermind breakfast. And Paul, you should have just, joined me in facilitating it because you added so much value to that conversation.
Thank you.
Thank you. Well, hey, so this is our first interview. If you could tell everybody in Mortgage Coach land a little bit about your mortgage practice, what market you're in, so we can get to know you a little bit better.
Yeah, I'm 29 years old. I'm based in Dayton, Ohio with Prime Lending. Got a team of 3 individuals. We'll do somewhere between 32, 35 million this year, right around the 200 unit mark. And that's a little bit up over last year, which has been fantastic. Started in the business back in 2010, really, with a branch management role in a bank after graduating college, and kind of went from there. So now we're hitting on all cylinders in Dayton, Ohio.
Love it, love it. Well, hey, let's face it. As mortgage professionals, as lenders, we want to bring in new young professionals into the business. We want to work with more millennial realtors, and so it's a big opportunity. So you've been in the business for what, 5 going on 6 years now, Paul? Is that about right?
Yeah, I just hit actually 6 years at the end of this month.
So it wasn't that long ago that you were, either doing average production or probably even struggling at one point. When did you go from struggling to really having, being a top producer, the level you're at now? When was that?
Really about 3 years ago is kind of where the switch hit. I went from doing, 40 to 50 loans a year and really having to push to get there, a lot of it with leads being generated by the company, to a completely self-sustained, self-generated book of business that's really very close to doubled the last 3 years in a row.
Love it. And when did you start using Mortgage Coach and become part of our tribe?
About 6 months prior to really starting to hit it on all cylinders back in 2013, 2014. I pulled up Mortgage Coach for the first time and actually found out about you through another LO and started using that with every client that I was doing leads with. And I found that what it really did was it got me out of the rate game that is so hammered into that lead-based lending. And it just stopped the rate conversation because I was able to take and turn that rate conversation into something totally different that made rate irrelevant for the most part and let us focus on what actually is best for you as opposed to what's the cheapest rate.
Love it, brother. So I know I asked you as prep to send some photos. When you and I were talking, you were telling me all the different ways that you use in Mortgage Coach. If you wouldn't mind just describing the picture we're looking at right now, just to give a feel for how you're using the Mortgage Coach mobile app.
Yeah, this photo was actually taken at a Starbucks here in Oakwood, Ohio. The gentleman I'm showing this to is a financial advisor that I've been doing a little bit of work with lately. And Ron Soliday is a great advisor. He sent me a couple of clients, and one of them said, you know, look, I'd like you to cover my options with him. I just happened to run into him stopping at Starbucks grabbing a coffee on a Friday morning, and was able to pull the mobile mortgage coach out and walk him through the 4 options we were looking at for a refi. And his reaction to that, you know, he had only ever seen an estimated closing cost worksheet out of Excel or something like that before. The fact that I was comparing the timelines for his client, who has about a 7 to 10 year timeline, and then also was able to look at, well, instead of putting 50% of your cash available onto the house, why don't you leave it with Ron to earn money? And we were able to use a reinvestment analysis for him at that point and see how much more they could make based on his projections for his investment portfolio's earnings while utilizing our cheaper mortgage.
Love it, love it. So one thing I've noticed when talking to you, you're a very values-driven mortgage professional. Everybody on this call, I have been working, our team has been working on a mortgage coach values and why worksheet. Paul actually went through this, and I've had a number of other mortgage professionals go through this. By the way, for anybody that wants access to it, I did post it on my Facebook page today. But Paul, let's talk a little bit about your values as a mortgage professional, and take that down to your mortgage coach why, because I think it's so important if folks are going to execute at a high level. And one of the things that you're doing is you're executing at a high level. That, you know, they've got to be clear on their values and what they're doing and why they're doing it. So would you mind just kind of putting some color around your values as a mortgage professional?
Absolutely. I think in the mortgage space in general, one of the biggest things missing, period, is knowledge. I feel that most clients think or just completely don't know what they need to know. So many clients read something on the internet. Everybody's doing, no matter you're a 50-year-old or an 18-year-old, you're researching something on the internet before you come in and do it. But that's not really knowledge. Knowledge is truly understanding what you've read. And to me, sending a client out of the office, actually knowing what they're getting and why it's the best decision for them is probably the number one thing to do. They've got to know that makes them comfortable. That shuts down the shopping, that shuts down the competition, because now they know you've got their best interest at heart. So that's huge.
So you've got these 3 values. Oh, go ahead, Paul.
So the mastery piece for me is, if I'm not a master of my business, I can't really help you at that high level. So I need to master that. And that all goes back, the advice just kind of ties into all that directly.
Got it. So you've got these 3 values. You've got your mortgage why. You know, if you'd share a little bit about the color of how you got to this point.
Really what I did is you're going through this, and I do some coaching as well, and we're working on some business vision stuff, and it really makes you think, why do you do what you do? What is your end goal when you meet with that client? And really it goes back to focusing on their specific situation and figuring out what's best for them. You could easily sell the cheapest rate or the cheap all day long. That is cheap on the surface, but if, without digging into the client's best interest and actually caring about the situation, we cannot do what's truly best for them for the long term or the short term if that's what their situation dictates.
So everyone on the call, you know, what are your core values as a mortgage professional? What is your mortgage why? And then bringing that down to the best mortgage coach professionals, the folks that are using the total cost analysis and getting the most value from it and delivering the most value, you know, they're really clear on their why. So if you could provide a little color on your mortgage coach why.
The big single piece of my mortgage coach why is education. I need to be able to educate my client before I can advise them. We're in such a complicated space for most people. They just don't do it very often. They do it once every 7 to 10 years. We need to educate them about what's changed, what options are out there, and then why those options are valid for them before we can give advice and help bring them to the realization of what that best option is.
Love it, love it. So folks, we did put a link to this. I will put it in the GoToMeeting chat. I also had a great mortgage coach professional. I've had a number of folks forward me their values, their mortgage why, their mortgage coach why, And I would just urge everybody on this call, I collect these mortgage coach whys, send them over to me. I'd really appreciate it. So Paul, I know when you and I were talking, we also kind of have in common sales mastery, Todd Duncan, and you listened to the interview I did with Todd several weeks ago. He talked about high trust selling. You had made mention that I'd never heard that term, but you've been doing that. If you could just kind of describe what story selling is to you, how you're doing it, and then we'll get into a little more details of exactly how you're doing it.
We really called it more emotional or relational selling. As any of the sales training I have done, but it's almost the exact same thing. And it really goes back to leveraging past experiences for you, clients, referral partners, and being able to convey a real story of how you help somebody, connecting that back to the client sitting in front of you, to give them not only the understanding of the knowledge base, but that deep trust factor. Hey, this worked for somebody else. So we're now taking that emotional chord with somebody and helping them understand why something's the right call with a real-world situation that would work for them.
Got it. So in terms of your why, it's all about education, it's all about advice, and obviously you play at a high level, so getting to a level of mastery. Folks, I do want to open this up for questions at some point during the call. So if you do have questions for Paul, feel free to submit those into the control panel, the GoToWebinar control panel. I'll keep an eye on those and I'll try to bring it out. So, one of the things I want to try to do here is really drill down on your process as an advisor, kind of understand the conversation you have before you deliver a total cost to a family. At some point in the call, I'd love to pass the desktop to you and actually have you show everyone how you're creating total cost analysis. So why don't you start with your process? How long do you spend with the client before the total cost? And then, I know you were nice enough to send a template of the email that you use, that you send to families. Let's just take them through the front end of the process, and then let's take them through a few stories. Show us how you're story selling.
Okay. For me, really, the process begins with a referral, typically from an real estate agent or a financial planner. That then goes into a little bit of relationship building with them. I want to get to know a little bit about them. We start talking about what their goals are, and that's really where my conversation starts off is, what are your goals? How long do you plan on being in the house? Do you plan on having any additional kids? What's the reason for our move? Is there a plan to move 3 to 5 years from now? So we really want to grab that situation. After that discussion, we'll go through and we'll at least try to grab a credit report so we know what we're working with from a realistic perspective, so that we can start drilling down to what options might be there for them as a client. And we'll pull out some of that basic information, credit, income, assets, what they may think they want to use as a down payment, what they have available. And really, from that conversation, that's hopefully no more than about 10 to 12 minutes that we really get through that. That's when the total cost analysis becomes part of the game. At that point, I'm looking to build that and start laying out some options now that I've got credit, income, and I know what the practical options are.
Got it. And from what I recall, what percentage of your clients are coming into your office? You do this in person. What percentage are you sending out an email, and then you're driving an experience over the phone and internet?
Depending on the month, I'd say somewhere between 40 and 60% of the clients come into the office. They still get the link. We still cover it in the meeting, usually on my iPad, and everybody gets one in an email. Whether you met with me in person or we're doing it over the phone, you get that template. You get a templated email with the total cost analysis in it.
Got it. So if they come into our office, it looks something like this. Is that fair enough?
That's correct. Yeah, I mean, that's an actual client sitting in the office. It's either that or it's on my iPad. My iPad had died before this meeting, so it was on the computer screen. But what we were doing was we were comparing this young guy's buying his first home, has great credit. We're looking at FHA versus conventional. Which one makes the most sense? We were able to really drill that down with him and have a conversation about why the first-time homebuyer loan that everybody calls FHA probably wasn't the right decision for him because of where his credit was. And it let us focus on the actual monthly costs, the monthly payment, the down payment, and how long he planned on being in the house, and build a story for him that worked in his 3-year timeline.
Got it. So whether they come into your office or whether they do it on the phone, they're getting an email with the TCA. Why don't we walk through? I know we've got 3 examples to walk through. So this is the email that you're sending out. Notice everyone that the subject line is loan options link. So it's really all about the options link. By the way, what percentage of the families do you feel like when you send out this email, they are clicking on the link? Do you feel like that's most of them, or do you feel like there's some that don't?
I'd say as far as accessing the link, north of 90%. 1 or 2 do not, but almost everybody, whether it's mobile device, desktop, whatever, I'm getting the tracking that tells me they're logging in. And I'd say they're on for an average of about 5 minutes as a minimum.
Got it. So by the way, benchmark for everyone on the call, if you're sending out your email with the Mortgage Coach link in it and less than 90% are clicking on it, you are doing something wrong. I mean, I've interviewed enough top performers that is the number, it's 90%. And I have heard from folks that, oh, people don't click on it. Well, it's because you didn't set the right expectations, you didn't ask the right questions, you didn't position it well. So if you're not at 90% click-through rate, you've really got to fine-tune your scripting. And we do have a lot of calls and interviews where we've got into that in more detail, but there's no doubt 90% is the number. So let's kind of walk them through. I know this first one we had is conventional versus FHA. If you could just walk us through what we're looking at here to get a feel for how you would tell this story.
This is a lot like the option that I did with the gentleman that was in my office. And we had a borrower sitting down with a little bit different credit profile. We talked about what were your goals. And in this one, they said, well, probably going to be there for about 15 years, but there's a chance that I'm going to get moved sometime in the next 3. So after a little bit of discussion, we found that we really wanted to look at 3 years if they're getting moved with their job. We want to know what our equity stance, what our payments, what our pay down is going to be over that 5-year mark, but also then where we're going to be at in 15 years in case we're here for the long haul. And then compare the overriding cost differences at that point. What we did is we looked at the 5% down. I would have loved to have done a 3, but they already had another home before. So we were between 5% conventional and an FHA. The FHA, we did have to cap the purchase price to make sure we're hitting our county loan limit. But when we built through that, we were able to look at the rate difference between conventional and FHA, and that was an eye-opener for them. They immediately thought that it was going to be much, much better to have that lower rate, even in the long term. And the biggest eye-opener was if they are there for 15 years. We really talked through what those cost differences would be. Now, in this case, because of where their credit score was, FHA was the better option. But that's not always the case. We played around with that a little bit. It's potential of what they could do to raise their score. But at the end of the day, they came in specifically wanting a conventional loan. We were able to get them into an FHA loan after that conversation by showing them the real data.
Beautiful. So you helped them make a confident decision. By the way, you mentioned 3 years. Was it a military family? I just know that with military families, it's not uncommon to show time frames that are 2-3 years.
This guy was not. He actually worked for a military contractor, but he was not he didn't have a military option. But this was a military contractor, so they did have the potential of these options. But they get moved around a little bit as well, and that's what they were going after. If they wanted that promotion, they'd probably have to move in 3 to 5 years.
Do you serve many military families in your marketplace?
We serve a ton. My VA business is pretty heavy. We've got one of the largest bases on the East Coast here for the U.S. Air Force.
Awesome. So folks, and Paul, if you could just, I don't think we have a military example here, but I know often, families in the military are concerned about moving. Sometimes it's 1 year, 2 years, 3 years. And if you could just explain how you walk a military family through a total cost analysis, I think that would be helpful.
There's a couple different approaches that I take with the military family. The first piece that I like to know is are you getting out? I need to know if you're getting out, because if you're going to get out and stay in Dayton, that's going to truly change the way we look at the situation versus if you're going to stay in and be moved. We then talk around the likelihood of when are things going to change? When might you move? So I need to know all that stuff to make a correct assumption. In my experience, most people on a VA loan do not want to pay closing costs. They want to come out of pocket as little as possible. That's the great thing about the VA loan for them. That doesn't always work well with sellers. So one of the strategies that we use quite often, if they know that they're 2 to 3 years out, they're going to get transferred, we may take them and bump that rate up 0.5%. But when we do that, we're able to cover all the closing costs. And you tell somebody, if you just get somebody on the phone and tell them, hey, the higher rate's better for you, they're going to think you're nuts and go somewhere else. But when you put it in front of them with this, and they see the small difference in payment compared to what we're paying in closing costs for them, they're in the middle of negotiations, the seller won't budge, they've got to have that house, that's what locks them in. Because instead of just throwing something at them they don't understand, we've given them the real data with the real number and how it's going to affect them in their situation. And that adds a whole bunch of comfort to their perspective.
Love it. And what percentage of families do you think are consuming the content on the mobile device? You know, where they're clicking on the link, you know, as I showed in this email right here, they get the email on their mobile device, and they're clicking on it, and they're going right to your mobile experience. What percent do you think that is?
I would say probably 70%, if not a little bit more. Very, very frequently, I'll have people in a house with an agent, and they're in the house with the agent on their mobile phone looking at the total cost of the house as I'm updating it.
Love it. So by the way, folks, that is one cool thing we're going to talk about. And when I posted on Facebook the other day, I talked about jaw-dropping service and advice. I think, you know, what makes you special, a lot of things make you special, brother, but, you know, the way you're using the tools, you're asking great questions, and then you're telling stories, you're explaining options, and you're doing that in an incredibly interactive way. So I do think that's one of the things that makes you really special. So one of the things I wanted to remind everybody on this call is that every single Wednesday, we talk about how to use our Mortgage Coach mobile apps, 11 o'clock Pacific time. Every Wednesday, we're doing mobile training. And Paul does just a spectacular job of using his mobile device, of leveraging it with families out there in the marketplace. So hopefully a bunch of you could join us tomorrow at 11 o'clock. Because here's the deal. You know, while millennials expect a mobile experience, everybody loves a mobile experience, which, by the way, I think that's one of your quotes. When you and I were talking, you said something in that effect. But, you know, Paul, how often are you pulling out your mobile device and just having conversations with folks like this, or pushing your customer to do this?
I mean, I've done it in the grocery store line at Kroger. It made my wife cringe because I heard somebody talking about their out looking at houses today. I have done it just about anywhere you can think of. I did it in an airport on a flight back here to Dayton. I think if you don't have a couple of templates that are generic enough and you keep them up to date with rates and as things change, that you could pull it up for just about anybody, you're missing a huge opportunity. Because you can't be shy. Business is going to come from anywhere.
Love it. So folks, if you're not already driving Mortgage Coach mobile conversations, make sure you start doing it right away. So Paul, I know we have another scenario we want to go through. I had asked you, what are the most common strategies that you're having? FHA conventional was really high on the list. If you could walk us through this strategy, this sounds like something that comes up pretty often for you.
This one was, and I was in hard competition. This was a conventional loan. Guy was not VA eligible, but I was in direct competition with USAA. And they were just fiercely loyal, as this so often is, to USAA. But this conversation was what got me, what shut that down and secured them as a client for me. What we were able to do was look at 4 different options on how we handled the mortgage insurance on this particular property that they were writing a contract on. We're already in contract. This is now a live deal. We're trying to decide what to do. So they were scattered, actually. He was in California at work, and she was still in D.C. before they moved back here to Dayton to buy a house. So I had them both on their phones on the Total Cost Analysis app, talking to me as I'm driving them through this presentation. And what we were able to do was compare the difference in cash out of pocket and monthly PMI, or do we look at taking the higher rate and eliminate it with LPMI, or do we just buy the rate down and still pay the monthly MI? And we were looking at a difference for them. They just had their first kid on the way. They're a young couple, not a ton of money in savings, and they're buying a fairly expensive house for a first-time home buyer. We were really able to strike a balance with what they wanted, because they had a goal for what they needed their payment to be. They had a goal to keep that cash out of pocket at a certain level. And quite frankly, the competition just could not keep up with this discussion when they called them back. That story that I learned about them, about their situation, and because I paid attention to what they needed, that made all the difference in the world. And I was able to put the real numbers in front of them, even across the country, and have that conversation when everybody else is either just giving them numbers over the phone or sending an Excel sheet.
Love it. And you put it on their mobile phone. So takeaway for everyone, I mean, it's important that you master using your mobile device to tell stories and explain strategies. And it's critical that you lead your customers to do that. I mean, when you look at mobile consumption stats out there, you know, first of all, everyone has a smartphone. You know, maybe it's not 100%, but when you look at the demographics, it's more than 80%. And, you know, especially for folks that are buying homes. And by the way, everyone's looking at their mobile phone. If they're not looking at it every few minutes, they're looking at it every hour. And if they're buying a home and you're putting their options on a mobile device and you've emailed it to them, you've explained to them how to get the advice. I mean, think of, you know, what lender can compete with you when you're helping folks make confident decisions with graphs and charts on their mobile device. But here's the deal, guys. You guys all got to get good at this. Paul has mastered it. You know, one of the homework assignments for everybody today is have a mortgage coach conversation today. And to me, a mortgage coach conversation means it's graphs and charts that are relevant to that specific family, and you're driving it on a mobile device. That's what's special. Everybody on this call, that's what you all have in common. You know, you're all mortgage professionals, but are you really using the tools that you have at the highest level? So by the way, Paul, we're getting some great feedback. A number of folks have said, great interview. Someone just said, hey, takeaway, put 3 options to share generically on the road. So Steve Hogarth caught that, you know, have those 3 options locked and loaded. And by the way, everyone, we teach that strategy at the mobile training conversation on Wednesday. We actually walk you through the 3 or 4 most common strategies. We help you stack the deck. We help you get ready for that. By the way, Robert Ring just reached out, said, great email, loved your template. By the way, folks, we did put a PDF of this in the handout section. So I'm not a believer that everybody should take this and just copy and paste the script. You should write your own. But I do think it's great inspiration. So all these slides are available in the GoToWebinar control panel under handouts. So let's go through our 3rd strategy, Paul, and then I'm going to hand off the desktop to you. And I want everybody on this call to see how quickly Paul can go through it, create one. And then we talked about this live interactive conversation. I want to make sure you show everyone how you are doing that.
Okay. Yeah, this one was a gentleman moving here from D.C. He's, again, a contractor. He's buying a conventional property. And the big thing was he walks into my office and says, you know, I want to put 20% down. I'm buying this house and putting 20% down. And the first question I asked him was why. And that kind of caught him back a little bit. It opens up that conversation because people still think that they have to put 20% down. And everybody hates MI. But when we were able to drill down those options, we were able to blow through 2 different price points and then eventually just 2 different down payment options and run the difference in payment monthly. He was able to keep 10% more of his cash. Some of that he was able to use to buy the new furniture for the house, and he ended up redoing two of the bathrooms in the house with that extra cash. And we were able to find out that it was much cheaper for him to do that with the money he already had rather than putting the money down and finding another way to finance it. So the conversation here was, how do we get you into a comfortable spot and make the house more yours? Totally different conversation than I had with somebody else. But it helped him realize where his money was best spent. And we were able to run those real numbers. It's a longer-term house for these guys. But his concern was, where am I at if I want to refi 3 years from now? And we can debate that because of rates and what the Fed's doing and all that till the cows come home. But that's what he really cared about. So we built it out in that 3-year time frame, and we're able to show him a very minimal difference for the overall price point going between the 10 and the 20 for the benefit that he got for keeping that extra 10% of his cash.
So folks, I'll bet you Paul spent no more time than any other mortgage professional, but he asked great questions, you know, why. He was able to drill down with the family that there was a 1-year window that made a lot of value and sense. There was a 3-year window, and then he was able to present the mortgage options in a way that was simple, it was personal, and it was more than a mortgage. It was, hey, I'm going to help you buy this home and have the lifestyle you want to have in this home through intelligent mortgage management. So I mean, an awesome experience. I love this quote, Paul. I do believe it. If you could just share for some folks, because you know you're having these mobile conversations with families and realtors. You know, what are some of the things they say after getting your advice on a mobile device?
The single biggest thing is my real estate partners, or real estate partners that I haven't yet worked with. One of the best things I can do is pick up a client at a Kroger, at a Starbucks, at an airport, and then connect with their realtor, because then they're in that house with that showing with their agent, and all of a sudden they're pulling out their phone and showing the agent the payments. They're not asking the agent about the payments. They're not asking the agent, what are my options? That agent doesn't have to do anything to direct them back to a mortgage professional. They pull that up, and the agents are astonished when I'm able to, live in front of them, walking through a home on a Saturday afternoon, change those scenarios. I did one last weekend. I'm a competitive cyclist. I was about 35 miles from home on my bike, took a slight water break, pulled up my phone to check on things, and actually did one right there in the middle of the road. And that agent was floored. That secured me 2 referrals this week from that agent that I just connected with on Saturday. Yeah, that speaks for itself, period.
I love it. So folks, homework assignment this week, have 5 mortgage coach conversations this week. What does that mean? It means you're delivering it to charts, and you're doing it on a mobile device. And in just 1 second, I'm going to hand it off to Paul, and he's going to show you guys how to do this. So Paul, I'm going to share the desktop now. I want you to show everyone on this call how simple, how easy it is to create a mortgage coach conversation on their own mobile, or not on their device. So I am forwarding it to you. Tell me when you can see the desktop. I have made you share, and Paul's going to walk everybody through this. Also, kind of a heads up disclosure or disclaimer. You're with Prime Lending. You guys have our Optimal Blue integration. If you're on this call and you're an individual LO who just has our standalone product, this is what it looks like. If you're on this call and you're with a lender that has Optimal Blue and they haven't activated the Optimal Blue integration, just either put a message into chat. We'll be happy to talk to your management team about turning that on, or shoot me an email at dave@mortgagecoach, and we'll forward you a link to how simple it can be done. But show us what it looks like just standalone and Edge to create an experience, and then make sure you go into the Edge Live, because I want everybody to see how you're driving a live and interactive conversation.
All right. So we're going to get Jane, homeowner, here. And she's going to be buying a new house. I'm heavy purchase business, about 96%, 98%. So we're going to stick with a purchase here. And we want to look at a 30-year conventional, 10% down. To me, it's real important to make sure that we have a clear, concise name in that product so they can just understand that off the top.
And while Paul is going through this, I am posting links to some of the videos I've talked about, a link to what our Optimal Blue integration looks like. So as we're going through this, also I'm posting a link to sign up for the Wednesday mobile class tomorrow. So if you do want to join us on Mortgage Coach Wednesday tomorrow, I just posted a link in chat. And also, Paul in a minute is going to show you how to drive Mortgage Coach Live. And I've posted a 2-minute video for anybody that needs a reminder on how to do that. So Paul, by the way, you've got a team. You know, you've done this before, so you're pretty proficient at going through this. Are you creating the total cost analysis yourself, or do you have someone on your team doing this for you?
A lot of times I'm creating it myself on the fly, just because it's so easy and quick to blow through it. I don't see the need to take the time to have a team member do it. But if we do have something we're prepping, once in a while my team will go ahead and build out that total cost analysis for me in preparation for a meeting.
Got it. So I mean, I've interviewed a lot of top producers. I would say there are a lot of top producers that have a production assistant where the production assistant is filling it out for them, and then they're fine-tuning it. I don't think there's a right answer. There's a lot of ways of doing it. This is Paul's process. But if you're on this call and you do have a production assistant, I also I don't want to discourage you from having them do the first round on this. So, by the way, Paul, you kind of
we do as well as
quickly, if you could make sure we understand. You are flying, brother. You've obviously done this a few times.
Sorry about that.
That's okay.
On the analysis screen, this is really where we drive that discussion over timing. We want to know how long they plan on being there, and we want to know what the likelihood is of a move in the middle of that position or significant life events. So we really want to see a timeline that works for their specific situation. I spend probably more time on that than average, definitely more time than average, trying to drill down to what that timeline is so I can make this meaningful for them. Because if I give everybody a 30-year analysis, let's face it, probably 90% of people aren't going to be in that home 30 years from now. So we want to make sure it's very specific to them.
Real quick, I want to just put an exclamation mark around that. So you notice he's really looking for a gap for himself to differentiate versus, hey, let me just, this is what you want, let me give that to you. It's why do you want that? And now he's creating a gap. One great question that I recommend every mortgage professional ask a family within your initial consultation is, how old do you want to be when your home is paid off? And you notice I paused, let them answer that question. And then based on this loan, you know, how old are you going to be? You know, and quite often there's a gap between where they want to be and where they're going to be. And again, I'm not saying every single client, every single time you ask that in this robotic way, but it's the more you can create either a gap or you can tailor something very specific to their lifestyle, the better. And so I think that's something very special that you're doing, Paul. Mortgage Coach community, you've asked a lot of questions in chat. I'm going to try to get to these. But also, if you've got some strategic questions that you're asking families to help get to that tailored advice, I'd love for you to share it, and I will read those out loud at a point in this call. So any strategic questions you're asking to get to the gap and to get to where you're really delivering unique advice, please share those now. Anyways, continue, Paul.
So we go from, we really want to also look at what's important to that particular client. We want to look at, is it the interest and MI, is it the cost of the loan, or do they want to pay it down? So that really, we need to make sure that we're on the right presentation there to focus on their requirements, their needs. We'll pick out which particular options we want. In this case, we're just going to throw all three up there. We're going to throw both conventionals and a VA loan up for them to look at. And then make sure that our dates are in there. I always want to make sure that I have the notify me. I have to know when they look at it. That's hugely powerful to me because then I know I can reach out to them and ask questions about the presentation. I know that they've seen it.
And actually, oh, go ahead. I want you to generate a link real quick. If just play along. You don't have to close that. Don't close that. Just go back to the main screen. Take that generate link, and I want you to take that link that you just generated. And I want you in the go to webinar control panel, if you could just put that in chat real quick. I wanna share that. Do you have access to chat over there, Paul?
Yep, I just posted it.
Okay, great. And by the way, everyone, I'm going to post that right now myself. And actually, I'm pulling it up on the screen. So on the screen, they can see it. Now, Paul, go into your live experience. By the way, I'm also taking that and I'm giving you guys, everyone, the link so you can really follow along while Paul does his Edge Live. So go ahead, Paul. Continue with your experience and start driving, an interactive conversation the way you do it.
So what we look at here, I asked them to look at this first and digest it a little bit so that they have a couple of questions. They've already seen this once before we really pick up and have a conversation. First thing we want to talk about is, I made 3 different options for you. We talked about both 10% down loans on a 30 and a 15-year timeline. We always know that the 15-year, I apologize, I'm going to go back here and change the term, which I neglected to change on the 15-year loan.
That's okay. While you're doing that, everyone, if you click on the link in chat, you're literally following along. You can see Paul is clicking it, and while he clicks it, it's changing on your desktop or your mobile device. I can see right now that there are 2 viewers. By the way, everyone, notice in the bottom left-hand corner, you can see how many viewers are clicking on this. So we know it just went to 6. So guys, let's test Mortgage Coach Live. Let's blow this thing up. I mean, we have hundreds of people on this call. If you click on that link in chat, there we were at 13 viewers, Paul. So 13 folks are getting to see what it's like. And if you click on this from a mobile device, it'll drive a mobile experience. So boom, we're at 27 viewers, Paul. It's time for you to shine, brother.
It's my biggest Mortgage Coach presentation ever.
Yeah, right?
But first thing I'll go to is, obviously we know the 15 is going to be a more expensive payment. We know that. We already have covered that. You're okay with that payment. I'll break down what our options are. Everybody does care a little bit about rate, but I just avoid that completely. And we do talk a little bit about our cash out of pocket. I want to make sure that everybody's comfortable with where that cash out of pocket is and explain it. I then turn the conversation to the monthly payment savings. What's that difference? And one of the key questions is, what could you do with that $618? Are you already maxing out your TSP or your 401k? Because why don't you put that in there as opposed to paying down the mortgage? We've seen equity in a mortgage completely vanish in a home in 2008. We've not seen your 401k totally vanish for a long, long time. So it's a good segue into some thought with the borrower. We know that you had a bit of a 24-month timeline, and that's where the 15-year really makes a difference. They really care about that interest in MI savings. We're saving you $6,000 on that 15-year. VA is still an option, but it's actually the most expensive because of the funding fee on there versus really good credit. The mortgage insurance on that 15 years is much, much lower. And then we break it out one more time over the 10-year mark. And we talk about which one is the lowest in overall cost. Again, 15 years is quite obvious. But if we're going to go to a 30, we really should look at the VA. So walk them through those live presentations. If I get a question directly about the closing costs or about what I've used as estimates, I always want to cover the fact that I don't know what your homeowner's insurance is yet, but I'm going to use $900 a year because that's a practical number in this area. So that's what I'm using up front. If you go out and get a quote on a home, I'll be happy to update this for you at any point. And we'll talk about the property taxes on a property like this that you're buying. Same thing through closing costs. We'll talk to them about a little bit what makes that all up. And if they really want to drill down, we can go into the detail and talk about why they need title insurance or what they need from that perspective and all of these closing costs. So we can really address what these are. And instead of paying for something you don't understand, you now can understand why all these fees are being charged and why it's so expensive to buy a home today. Jane, do you have any questions?
Love it. So it looks like 86 viewers. And by the way, folks, in the bottom left-hand corner, just to the right of disclosures is where you can see how many people are viewing. And, how often do you have like a husband, wife, multiple people viewing this at the same time? Does that happen?
That does happen. A lot of times they're on the same device. They're just both looking at it. But quite frequently, I do a lot of business with clients that are coming into the area as part of the military or one of the contracting companies, and one of them is remote. And in that case, I'll do that quite often where I have one person in my office on my device and another person on their device in California or Alaska. I even had one in Germany last week.
I love it, man. This has been great. And by the way, we're just getting tremendous feedback on what you're doing here, Paul. I just want to showcase for everyone, if you go to the presentation folder, where it says Edge Live, that's what he's clicking on to drive this experience. In the bottom left-hand corner, you can see, actually you had a lot more than 81, but that's where I took the screenshot. I do want to remind folks there is a field in copy analysis. By the way, Paul, do you use that feature very often where you just copy an analysis and use this shortcut?
I do. If I'm copying a very similar situation, or if I'm showing a second mortgage coach for one reason or another to a borrower, maybe they have a couple of different scenarios we need to play through and I need to use 2 live presentations, I'll always use the copies function there.
Got it. So I mean, what we're teaching you is just game changing, folks. If we could get everybody on this call to just ask questions and then deliver your mortgage advice in a way that's tailored to the family, I don't care what level you're at right now, you'd go to another level of success. So I did put a link to how to use Mortgage Coach Edge Live. You can see it's a 1 minute and 51-second video. If you're having challenges, you can always email support@mortgagecoach.com. We cover this on our Wednesday mobile call because you heard Paul, he actually drove an experience on his mobile phone for a family. So on your mobile device, you could drive this experience and deliver graphs and charts for families. And again, if you get good at this, you can bring this into your conversation with realtors. By the way, Paul, what percentage of your clients are first-time buyers where you're delivering, rent versus own experiences?
About 30% probably. Right now, our first-time home buyers.
And how do they like getting this experience from you?
The first-time home buyers, whether they're 50, 70, or 30, they all absolutely like the information. They love it. They're enthralled with the fact that we can put down what they're paying in rent today, show them their current rent, and then find a mortgage that matches it or is cheaper, whatever their goal is. We can give them a direct comparison to what their bills are today and an idea of what house that'll get them into. So it really sets them out during the pre-approval stage. It sets them out with more information to go out house hunting. And again, it gets our foot in the door, secures them as a client much, much quicker, because now I'm providing that information. I'm not letting them search for it. I am driving the discussion and making sure that they come back to me with those questions, not the internet.
Love it. And then I know I asked you to send me some pictures of your office, so we got a picture of you meeting with a family that came into your office. And then what's this photo? Just give us a little color around what we're looking at here.
So this is actually a training class for some brand new agents. These are new agents, just got licensed, just onboarding with the company that I do a lot of my business with. This is about 6 new agents here, and what we're talking about is different loan types. But I'm using the mortgage coach in that presentation to explain the difference between a VA FHA conventional loan and how that might look on a similar home in the area. It's also then driving, when you refer a client to me, let me talk about what we do. We're going to get them pre-qualified. We're going to make sure that we gather docs. We're going to make sure that they're a solid buyer as soon as you send it to us so you're not wasting your time. We're also going to educate them, just like we're educating you here today. We're going to make sure they know the options they have available and why those options are the best options for them. And then we're going to also make sure that they know to reach back out to us so that we can verify the home that they're going to write on actually fits their pre-qualification letter, and more importantly, their budget and wishes. Because if they're not comfortable at the end of the day, they're never going to have a great experience if they're overspending themselves. So it's all about getting them comfortable, driving the conversation from our point of view so we can make sure they have the real data to make this extremely important financial decision in their life.
Love it. What percentage of your realtors actually, download the mobile app and then, they have that advice on their mobile app? What percent?
It's almost a requirement for my partners. So I would say north of 85 or 90% have the mobile app on there. And I'll get phone calls a lot on a Sunday. Somebody's in an open house, and we'll usually for our select core, for our normal folks we work with routinely, we'll prep 1 or 2 mortgage coaches for them on a Sunday when they're out there at an open house, so they can pull it up and we can have a live conversation with one of their clients that's walking through the house.
Love it. So I don't have any pictures of Mortgage Coach on mobile houses, but I would say a weekend doesn't go by where either I don't get forwarded a picture of Mortgage Coach running wild at open houses, or I see something posted on Facebook. So for everybody on this call, we do have a lot of videos in our YouTube channel that talk about how to use Mortgage Coach at mobile at open houses, and we do cover that in our Wednesday course. So I encourage you to come to it. We talk about how to have an open house experience with Mortgage Coach at that class. So first of all, folks, we're getting towards the end. We do have some questions that are coming in. We're getting some great feedback. Gosh, I mean, it's kind of blowing up with feedback and questions. Let me go to this one question that came in early on. Let's see. It was, here it was. It was most borrowers looking for the lowest rate. How can you educate them the lowest rate may not be the best loan for them? I mean, I feel like you've kind of done that, but if you could just answer that question, because I know so many loan officers struggle with that.
Hey, if you compete on rate, you'll lose way more often than you win, because there's always somebody that's going to undersell you on rate. For me, some clients I'll even say, I'm not Walmart Mortgage. The advice, the knowledge that I have is worth it. And the first thing I try to do is I do not bring up rate early on in our discussion. I want to keep that on the back burner. I want to talk about them. I want to talk about their goals. I want to talk about their timeline, because it's in that conversation that you pick out the piece you can latch onto and make rate not matter. Many times with especially VA buyers that are going to be here for 2 years, it makes more sense to take that higher rate and make sure you're $0 out of pocket, or sometimes walking away from the table with a little bit more cash in your pocket on that purchase loan, because you're never going to pay me back enough money in that rate to pay me back for the money that I gave you up front to cover all that stuff. And when we show the real numbers and we take a true data-driven analysis of those options, I think it just shuts that rate discussion down. And you're always going to have your rate shoppers that care about nothing but rate. We as an industry have trained the clients to do that. But that's not everybody. And a lot of times you can overcome that with showing them the real difference in the rates as well. Because you can ask somebody, well, is so-and-so bank doing this for you? Have they helped you on a Saturday afternoon? Or do you think my services were worth a little bit? And that's a conversation that I have weekly, if not daily, with clients. Because you're correct. Rate is a huge thing. But we've got to turn that conversation to realistic options instead of rate, because we don't live within a rate. We don't live within a mortgage. Get the mortgage out of the box and put it within your entire financial plan. And now let's take a different look at things.
So just to summarize, asking family their goals, he's really getting to the heart of what matters most to them, and then he's presenting the options in a way that addresses those goals. Some might be really strategic. I want to build wealth with real estate. A military family is more concerned with how much equity am I going to have in 2 years, and am I going to be landlocked? He talked about a client that came in wanting 20% down because they want to avoid PMI, but they found out, you know what, when you really look at the monthly payment difference, and now I'm going to have more money to buy the furniture and outfit the home with the lifestyle that I want. I mean, it's different with every family, but it all comes down to ask the family their goals, understand their goals, and to deliver the mortgage options in a way that's tailored to them. So here's another question that came in from Craig. And by the way, folks, thank you for all the great feedback. By the way, Gene just weighed in and he said, great job, Paul. He said, what a great job of education. You're an inspirational example. Thanks, Gene. But Craig had a question that comes up, and I've heard it a lot. How do you keep clients you educate from taking that guidance to another lender?
It's definitely something that happens. Again, as a percentage of the time, it's something that will happen. But I find that you can't stop at the education. You've got to continue to add value. You've got to continue to follow back up. You've got to continue to tweak that presentation and ping them with an email. If you're working with an agent and that's a great agent that you're working with, you need to make sure that you know if they're changing direction on their home search. By staying engaged with that client and continuing to try to drive the conversation, that's the secret. That's making them sticky. We're adding the true value. They might be able to take the options that I threw out there and tell another lender, I want this. But in my experience, a lot of loan officers don't take the time to know their options that well. They don't take the time to know the client well enough to tweak that. And they're stuck selling what they always sell and what they know how to sell. So thinking outside the box and driving the conversation is how you make them sticky in my book.
Love it. Well, I mean, my answer to that is you're not going to bat 100%. I mean, you can't win every single loan. But if you ask questions, if you're really curious about what matters to a family, and then you're dedicated, as Paul put it at the beginning, to knowledge, mastery, and advice, and you deliver an experience, you're going to win a whole lot more than if you're not educating and you're not delivering that value. So folks, keep the questions coming. I do want to, shine a light on next Tuesday. I'm going to have Jeremy Forcier as my guest. He's going to talk about how he's been maximizing his potential. You know, he's one of America's absolute most successful mortgage professionals, and he thought he was at the peak of what he could do a year ago, and he just keeps taking it higher. So Jeremy is always one of the highest rated guests that we have. Don't miss that. Want to remind everybody, you could go to our calendar online at our website, and every event that we do every single day is updated. So check it out. And as I said, we do live training every single day. Tomorrow at 11 o'clock Pacific, we're going to teach you how to use your mobile device to be a better teacher, to be a better educator, and to be a better mortgage professional. So don't miss that training. It's every Wednesday. It's live. If you could let us know what you thought of today's call, on a scale of good to great. If you're a guest on this call and you want to learn more about Mortgage Coach, click the last option and we'll reach out and give you a demo. By the way, Paul, the reviews are coming in and people have just absolutely loved this call. So we're in the last 90 seconds because I always like to end on time. Some words of wisdom. You've got hundreds of Mortgage Coach professionals on this call, a lot of prime brothers and sisters. What are some closing thoughts as we wrap up today's call?
I think for me the secret is to just you've got to put the client first. You've got to truly care about their situation, learn about them, and about providing the absolute best option for their specific needs. If you do that, everything else just falls into place.
Love it, everyone. Great. Oh, go ahead. I didn't mean to cut you off.
I would say, and don't be afraid to pull it out anywhere. Pull that Mortgage Coach presentation out no matter where you're at. I've done it in hundreds of places every day of the week. I did it on an airplane actually last week flying back from Oregon. Just use it. Don't be scared. Pull it out. Use it. It'll win your business.
Love it. So the big takeaway for everyone, use your mobile app. Use it to tell stories. Use it to explain strategies. Master it yourself and get your partners to download it, have access to it so that it's part of an interactive experience. And hopefully everybody on this class, you're going to learn to drive Edge Live. You can do it both on your mobile phone and your desktop. Hey, Paul, thank you for all the time you took to prepare for today's call. Super grateful for the value that you brought to our community, and I can't wait to hear your success story to continue to climb. Bring you back next year and hear where you're at.
Awesome.
All right. This is a wrap. Take care, everybody. Have a fantastic week.